Welcome to the Tax Platform, where we discuss various matters on tax. In today's episode, we are with Dumeloran Now, who is a tax consultant or tax expert. And welcome, sir.
Thank you, Briga. Good to be with you here tonight.
All right. On today's episode, we're going to be discussing record keeping, I guess taxation and record keeping.
Yeah.
So we all may be aware that record keeping is all about activities for keeping records or accounts. So, sir, I need you to take us through why record keeping is important for tax purposes.
Thank you, Briga. Record keeping it's essential when it comes to tax. It's core. Whether it's income tax, whether it's value-added tax, whatever tax that you are dealing with, record keeping is important. One, if BES conducts an audit, obviously there is information they're going to ask for. And if you are not keeping your records properly, you may lose some deductions that were available to you. Example for maybe input tax, they may write back the input tax because you don't have the documentation. There is no evidence that there was such kind of invoice issued to you. So it's important for you to keep those kind of records. Even for income taxes, they may ask you for additional information because in the act they are allowed to ask for additional information when assessing for your corporate returns. So if you don't have information or documentation to back up the deductions that you have made or assertions that you made in the return that there is 1, 2, 3 that happened, it will be difficult for you to get exemptions, and you obviously get penalties that were not supposed to be there if the documents were there. So it helps in you averting situations where you find yourself being charged penalties unnecessarily.
Mm-hmm. Yeah. Okay. For how long should one keep records for tax purposes?
Yes. So for income tax purposes and your capital transfer tax, you should keep documents for up to 8 years. Then for VAT, a minimum of 7 years. Yes.
Why such a long time?
So that whenever there is a query by the tax authority, then you can always refer to the documents.
Okay.
Yes, because they can open assessments up to maybe 8 years for income tax, and for VAT, there is no limit in really opening assessments.
Okay. Are there any penalties as far as for those who haven't or who are not keeping records? And maybe you should be a little bit more specific about those penalties.
Yes, there are penalties for not keeping certain records or not being able to avail those records. When the authority asks you about those records, maybe like for example, if there is an audit and you are not able to provide the information they are asking for, you can be charged up to a maximum of 10,000 penalty because it will be deemed as refusing to cooperate with the government, or maybe you are concealing some information. So it's very essential to avoid those silly penalties and make sure all the records that are necessary that should be kept, whether it's invoices, whether it's financial statements, whatever that you use in your business, whether it's loan contracts, anything that you know is essential in the business, in the running of the business, that is documentary evidence. You have to keep it, especially financial records.
Okay, great. I guess then it means it's very, very important for institutions or any institution that is taxable to keep records to avoid such penalties.
Definitely, yeah, it's very important.
All right, great. So this was the Tax Platform on taxation and record keeping. For more information, you can go to our social media platforms on Facebook, Twitter, or even a YouTube channel at the Tax Platform. This was the Tax Platform, informing the nation on tax matters.